Right. Let's go in here. All right. Good morning, everybody. Happy Friday. Happy Friday. You guys should be able to see my screen. Let me know if you guys can see my screen or not. All right. Good morning, everybody. Good morning, everybody. Let me just update this. Okay, here we go. Now I could see myself. All right. Now the world is back to normal. Let me just say hello to everybody and we'll be getting started. Armulfo, Vernon, Glenn, Jody, Dave, Steven, CJ, Stacy, Vano, Omar, JB, Anil, Robert, Eduardo, W. Wong, Manuel, Edgar, Thomas, Anil, Ben. Good morning, Ben. I sent you that email back yesterday that you, hopefully you got it in one piece. Pops, hey, Pops. Bob, Wade, Don, JC Realty Group. How are you guys? We got Jay, Cindy. Good morning. Good morning. Good morning. Dennis, Dr. Serena, my actuary's here. Sarah, Colleen, Dr. Serena. Good morning to you too. Todd, John, Robert. We got a lot of people here. We got Henry. We got good morning, Henry. We got Naples fan. We got Patrick. We got Rick. We got Dave, Kim, Bob. Good morning, Bob. Steve, Manuel, Cam. Good morning. Fight Hookham. Good morning. Congratulations to the Fighting Irish and Hookham. Patrick, Blair, George, Scott, Jody, Ray, Robert, Michael, Gustavo. Good morning, Gustavo. Happy Friday to you. Rich, good morning to you. Happy Friday. Yes. Oh, Los Angeles, man. God have mercy for everybody suffering in Los Angeles. It's awful. I've been chatting with my buddies. I have a handful of friends that I still have in Los Angeles. You know, childhood friends, lifelong friends, and they're all fearful that their house may burn down. It's awful. It's awful. Good morning, William. Hello. Good to see you. Thanks. Good to see that the screen and audio is good. Dave, Jesse. Good morning, Jesse. I hope you're doing well. Happy Friday, Mont, Kevin, Tom, Robert, Rick. Yeah, it is. It's awful. I mean, I had tears in my eyes yesterday. Addison, Rebecca, Mario. Yeah, 200 people. Jacques. Good morning, Jacques. Stacy. It's awful. It's really, 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 really awful. This is bad. This is bad. And now I'm hearing all this talk about them not having the water and all that. Hey, Moondog. Glad you're here. I pray for everybody who is injured and who suffered a lot of losses. I looked at Pacific. You know, Pacific Palisades is the second wealthiest area in Los Angeles. So this happened. The medium home price there is about $3 million. The average home is about $3 million. That's like a little 1,500 square feet house, and then they go up from there. That's where the majority of celebrities moved from Beverly Hills over the last 50 years. It's a little more. Pacific Palisades is between Beverly Hills and the beach. It's the west side, and I mean Tom Hanks, Steven Spielberg, Cindy Crawford. I mean I could just keep going on, but 80%, 70%, about 70% of celebrities and live in Pacific Palisades, Malibu, and I lived in that area for many years, and it's awful. It's just awful. I never in a million years imagined that area, especially the flats, would be burned down. But whew, it's awful. It's awful. Hey, Richard, it's morning. Good morning to you too. It is pretty cold here too. Yeah, they all. I mean, they all live in that area. They all live in Pacific Palisades. Yeah, yeah. There you go, Korea. Yeah. So it's awful. It is god awful. All right, let's pray for everybody there. Also, I have a class that I will be doing today that I have not done in over a year, probably over a year. It's happening today. This is brand new stuff. You guys have not seen this yet. It's happening today. It's going to be pretty good stuff. I'm going to give you the link right now for it. but it'll be pretty cool. Here's the link. You guys are in for a treat. Here, let me give you that here. Yeah. It's something I haven't had live in over a year. And it's a very low priced item too, by the way. If you guys are trying to get in on with a low price, this is a good way to do it. Um, and I'll be giving you my number one stock. It'll be pretty cool for next week. All right. And let me give you customer service live and we'll get started right now. The Cam and Gustavo show. What do you got on the menu today, Cam? What's on the menu? Let us know. It's happening at noon and at 1 Eastern time. I highly recommend you guys. It's not going to be a replay of what we've seen the last couple of days. It's going to be all brand new stuff. I'm gearing you guys up for 2025 the right way. Now, let's talk about the things that are driving markets last night and this morning, okay? So record high property taxes and insurance now account for 32% of U.S. mortgage payments, raising concern about consumer spending and affordability. You as well, JNS. You as well. The correlation between bonds and stocks is now at a 3-year high. I mentioned to you last week that the correlation between TLT and the U.S. stock market is now at 0.73. Now, you may probably be thinking, Roger's just talking about some numbers. No, no, no. This is huge. This is really, really important because the bond market is going straight down. That's why. And on top of that, this bond asset that we always look at, TLT, it posted a record 7.4 billion in net outflows over the last 2 months. Okay, highlighting that investors are retreating from long-term bonds, even with yield getting higher. Okay, that's bad. That's bad. That means folks are not putting their money into bonds as yield is getting higher. They're putting their money into other assets or cash. Okay, that's outflows. $7.4 billion right here left this asset. $7.4 billion. And the reason I look at TLT is because this is the biggest one. There's several others, EDV, there's several, but this is the most liquid one. Okay. All right. Tesla launched a new car in China. It's called Model Y, and folks are getting very excited about it. So we could potentially see some excitement on that note. ISM data revealed price paid by purchaser managers index is at a 22-year high, raising fresh inflation concerns about potential Fed tightening. Now, I'm going to ask you guys an interesting question. Based on what we saw on the PPI report last time, not CPI, PPI, Producers Price Index. Remember where the numbers were worse than they were a year ago? And I highlighted it for you. We were all talking about it. I said, look at it this year. And we only look at numbers year after year. And I explained to you, I don't care about monthly. That's too much noise. But I care about the annual number. And all of the numbers were at the same level or worse than a year ago. This was 2 weeks ago. You guys couldn't have forgotten it by then. So does this ISM data reveal any surprises to you? If producer price index is higher than it was a year ago, then why would purchaser managers be getting a deal? It doesn't make any sense. So if this is not evidence of inflation, right here, ISM data reveals price paid by purchaser managers is at a 22-month high. That's bad. That means all that nonsense that the Fed is telling you. That means all that the Fed is telling you about how things are getting better and how the kid can now have a motorbike. It's all bullshit. Okay, that's a bottom line. If purchaser managers are paying more, then they're obviously going to. Let me ask you a question: who gets stuck with higher prices, the stores or the retailer? Forget about anything you know about the markets. Just common sense. We do every time, right? Every time we get screwed. Do you ever see public saying food prices are up 10%? We're going to absorb it? Hell no, right? So what do you think is going to happen if if people who buy for the stores are paying at a 22-month high? Who do you think it's going to trickle down to? Let's see. Let's think about this one. Donald Trump? No. The government? No. Us. Yes, of course. And again, this is not political, and this is just common sense stuff. 22-month high for purchasing managers are paying a 22-month high. Now, has does that mean that the Fed has made any dent in interest rates in inflation in 22 months? Hell no. All right, we do consumers, of course, Stacy. Every time it never changes. The song doesn't change. So that's bad. That's bad. And we have an employment report coming out in about 20 minutes. Let me continue this. I think I'm almost done. Percentage of U.S. homeowners listings sitting at a 60 plus days without going under contract rises up to 54.5%, making the longest slowdown since 2019, which wasn't really a big slowdown. Okay. Construction job openings dropped by 178,000 year over year in November, nearly a 20-year record decline, highlighting a slowdown in infrastructure sectors. Okay? So, sorry, I don't mean to like bust your chops, but these are AI generated biggest catalysts for the morning. I get them every day. I don't read all of them. Like UK 30-year government bond price plummets. That's not going to be a huge debt. I don't give you all of them, but I do read them, and they're very important. So please, let's not ignore data. Now, before we really get started into the technicals, I want you guys to understand something, okay? And I'll talk about more of this. The last week and a half, I've been really slow to give you guys trades. Not in the pit. Pit, we've been, we're always got something going on in the pit. But in most of our services, we've been really, really slow to give you guys trades. Now, I want to explain something to you. Look at the SPY over the last several months. Look at the SPY. You see how it trends, how it moves, how it doesn't just go up and down for 2 days and then comes down. See how it moves? It goes up and down, up and down. It hits the moving average. Do you see that? Okay, look at the SPY since New Year's, the last couple of weeks. Look at the SPY. It goes up for 2, 3 days and it comes right back down. It comes down for 2, 3 days and it comes back up. Anything that you do here outside of income strategies, which just kind of take advantage of time decay without the market doing anything, you would have lost money. Nobody can make money in the market except day traders and ultra short-term traders in a market like this because we're not seeing any movement. Now, if there's one thing you guys have learned from me, and I'm hoping that you guys have learned this from me, is that market comes first. Market comes first. Market comes first. When you're buying real estate, what's the first rule? Location, location, location. The first rule for stocks is market comes first. If you guys haven't figured this out yet, we base everything we do based on the market. If the market is trending up, we try to go up. If the market is trending down, we try to go short. But what do you do when there is no trend in the market? There is no trend in the market. Anything I would have given you would have lost money. Now, let me ask you guys a question. Do you guys want me to give you losing trades? Who wants losing trades? Raise your hand if you want losing trades. Do you want losing trades? Do you really want me to give you losing trades? All right. So Texas on our house in New England. Oy, oy, oy. Good for you, Penny. Good for you. You should move to Florida. Be closer to Uncle Roger. Hang out at Nocatee with me and help me put some trades on. Carlos, avoid forcing a trade is unclear. Yes. Cash is a position, guys. And I haven't gotten a lot of emails, but I want to explain something to you guys. I'm protecting you from yourselves. Look at this. What are you going to make money on here? Look at this. 3 days up, 3 days down, 3 days up, 3 days down. So folks, Roger, I bought a service from you and you promised me a certain amount of trades. I promise I'll give you all of those trades. I'll double down when the market's doing this. But it's second to impossible to make money in a market like this because there's no trends. There's no directional bias. Do you guys understand that? No, Julian, you can't. Well, that's what income spreads are. If we were getting a pile of services, it would ease the pain, but everything costs extra garbage collection. If we were getting a pile of services, it would see the pain. Yeah, yeah. I could be losing trades on exactly, exactly. You could be in your losing trades on your own. So, folks, I'm not doing this. I'm not doing this because I'm an ass. I'm not doing this because I have I'm proving something to anybody. I'm not doing this because I'm lazy. I'm not doing this because Matt is out. I'm not doing. The only reason I'm not doing this is because I'm trying to protect you from yourself. You can't make money in a market like this. The good thing is these periods don't last very long. Odds are we're going to break out or break down, but and because earnings are starting next week. But I'm literally trying to protect you from yourself. Okay, every trade we would have taken would have lost money in this environment. Almost every trade. Why would you want me to give you losing trades? Do you guys have like are you guys masochists or something? So please, 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 please understand. I'm doing this to protect you from yourself. Well, it's not even me. Look at the market, man. You could see it yourself. You've been doing this long enough. Look at this thing. 3 days up, 3 days down, 3 days up, 3 days down. I mean, it's insane. Yes, and that's why you have all the averages are here. That's why the VWAPs are all over here. So folks, please, please, please understand. I'm doing this for you, not for me. I can literally give you 10 trades this morning. I don't want to. Okay. All right. So we have a report coming out in about 10 minutes. It is a big report and it could move us past this level. Okay. Or it could be a major catalyst. Potentially, it could be a catalyst. I'll turn on TC 2000 in a little bit. And by the way, as far as the report, let's see what they're expecting. And again, next week earnings start, and we have consumer sentiment at 10 a.m. today. All right. So here's what we care about. Here's what we care about. This is what we care about. We care about the unemployment rate, the annual unemployment rate, and we care about the average hourly earnings. That's what we care about. Okay? That's what we care about. These monthly numbers, they're too noisy. Yes, the hardest thing for you guys to learn is patience, but it happens to be the second most important thing in trading. So, and again, we're looking at 157. The consensus is between 125 to 200, which means they have no idea what's going to happen. But I want to hear the unemployment rate and I want to hear the average hourly earnings. That's what I want to hear. We'll see how the report trades. Now, US dollar. Look at US dollar. It's not weakening, is it? It's not weakening. Folks, this is very, very bad. It means that gold could potentially be stuck. Now, gold has been going up because stocks are right now. A lot of folks are putting money in gold because they're taking money out of TLT. But this is temporary. This is temporary. This is temporary. This won't get us very far. Now, we're right now at our first point of resistance for gold. If we get above 2782, we have a clear shot of going higher on gold. Okay, but seriously, but in all honesty, be careful, because the bond market is going lower and yield is getting higher, which means U.S. dollars getting higher, which is more inflationary. Yes, U.S. dollar going higher is more inflationary, folks. I'm being sarcastic. You all know that. Yeah, tariff reaction. We don't talk about that here, Cam. Yes, no tariffs. Oh, yeah, yeah. Did you guys hear about this weekend? He's really going hot and heavy on the tariff talk. All right. So bond market not seeing any reprieve. Hopefully this will start going higher. So far we're down 0.20. Let me turn on TC 2000. Let me get it going here. Close it. Let's get TC 2000 on so we can get it ready to go. I'll tell you guys, this is like the worst time in the world for tariffs. If Trump decides to give us tariffs, whew, because right now we're very vulnerable. Okay, so here's the TLT right now. Here's the TLT. That's the bond market right now. Let me see my scanners here. Okay, here's the bond market. Okay, here's the VWAP right here. This is the 5 minute chart, so you could see how it's been doing. Look how choppy it is. This is yesterday, Wednesday's close right here. We're below that level right here. So we'll keep an eye on it, okay? We'll keep an eye on it over the next 20 minutes or so. Yeah, yeah. We're not taking over Canada. We're not taking over Greenland. We're not taking over the Suez Canal. None of this is going to happen. Please, I don't. And thankfully, nobody's asked me questions about it. But none of that is going to happen, folks. I just want you guys to know, none of that is going to happen. Um, China, China is now on its way to the 200-day moving average. I hate to say I told you so, but we've been talking about this nonstop. The next support level is the 200-day moving average, and then it's going to come right down here. And once it comes down here, we're going to base out like we did with the Russell 2000 for a very long time because it seems like there's a lot of support at this level. If we break this level on the way down, we're going to go all the way down here, but I see a lot of liquidity right here. So I think we're going to stop and kind of bounce around the 200-day moving average. But the point of this exercise is to show you that China has not done anything to spruce up their economy. All right. All right. So nothing. All right. Let's put everything together. And we're going to talk about volatility right now. Volatility is right here, right at the 18 level. It tried to go to 19 and it couldn't, but I want to first put everything together for you. Where's my, here it is. All right. All right. Investors are adopting a cautious stance ahead of the jobs report, which I completely understand. eBay was up 10%. Meta talked about publishing some of their content. I don't really follow that very much. GE Healthcare is top percentage gainer on the NASDAQ. That's very good. That's a great stock. To the downside, Edison International. I talked to you guys about this in the pit on Wednesday. I told you guys that Edison International slumped over 10% because of the California wildfires. Let's see how it's doing this morning. Oh, it's up a little bit. Hopefully that was it. Hopefully that was the bottom right there. But anyways, that didn't do well. AMD got downgraded. Not good for chip stocks at all. And this morning, I'm just jumping ahead a little bit. It got downgraded again, this time by Goldman Sachs. And NVIDIA got downgraded. It didn't get downgraded. Reported that Biden administration plans to impose additional restrictions on AI chips. Why can't Biden leave already? Please, just go already. Just go. Go already. Leave. For everybody's sake. Anyway, this is going to be bad for chip stocks today. This is not going to be good for chip stocks today. Nike got upgraded. I'm pretty bearish on Nike right now, and I'm fairly neutral on Snowflake. Okay. We have earnings starting today with Constellation Brands and Delta. Keep your eye on United Airlines because it'll be impacted by Delta. That's one of the stocks that I'm liking today. And Constellation Brands as well. Consumer staples and transports. Okay. Hey, look at that. We got a lot of people here. That's good. And please hit, everybody except Carla, please hit the like button. Okay. Carla, you don't have to hit the like button, but everybody except Carla, hit the like button if you'd like. All right. What about momentum levels? Folks, we are in deep doo-doo. We are in deep doo-doo. I hate to say I told you so once again, but look at momentum. Look at last month. Look at last week. Look at yesterday. And look at today. I really feel bad for Biden every time I see him speak. Exactly. Yeah, it's like, come on, man. It's funny. I'll tell you something interesting. I saw a video. Of Biden from like 35, late 70s. I haven't seen him that young before, and like it's a shame. It really is a shame. I mean, he was a normal. I mean, whether you like him or not, whether you agree with him or not, When people get to this stage, they shouldn't be running the country. I mean, it's time for him to retire. It's time for him to retire. That's all. I don't want to be, I don't want to be mean or nasty, but it's time for him to retire. It was time for him to retire a couple of years ago. Really. I mean, it's sad. It really is sad. So we're at 50.33%. This is really, really poor. Folks, if this number goes down one more percent, we are officially in a bear market. It's not just about getting old. It's about getting old and having having a position like that. I mean, come on, that's just torturous. It's like hiring Clyde to be to be a security guard. Come on, I mean, you don't do things like that. Yeah, it caught up with him. And again, I'm not trying to be an ass. It's just it's sad. It's sad. It's sad to see, especially after the way I saw him. It's sad. It's really sad. So this is a very, very bad number right here. This is a very, very poor number here. I don't like this number. I don't want to jump through all of this. I want to read some of this to you. So yeah, AMD not doing so well. ADP number, private payroll rose by 122,000, not by a good amount. Now, this is the part I really wanted to read to you guys, the FOMC. The minutes from FOMC released Wednesday revealed that officials embraced a new approach. Oh, a new approach? Why did you have to adopt a new approach? What was wrong with the old approach? Embracing a new approach to rate cutting in light of the heightened inflation risk. Okay. Opting to proceed more cautiously. They're going to be more cautious. That's their approach. Okay, folks, they're going to be, after lowering rates 3/4 of a point where nobody asked them to do it, and I mean nobody asked them to do it, they're going to be more cautious. That's the ticket. Let me put this in different words for you. We made a gross error in our judgment. We ignored all the data. We certainly as hell didn't listen to anything Uncle Roger said. We didn't listen to anything that Donald Trump said. And we decided to lower rates not 1/4 of a point, but 3/4 of a point at a time when we should have been raising rates. Yay! We're so amazing. That's what they're saying right here, okay? Participants indicated that the committee was at or near the point at which it would be almost appropriate to slow the pace of policy. Wait a minute, dude. You just started you started 10 weeks ago. You started lowering rates 10 weeks ago. And now you're adopting a new policy stance after you lowered rates 3/4 of a point the first time in 4 years? That's called we made a boo-boo right here. Okay? What morons. Almost all participants judged the upside risk to inflation outlook has increased? No. Really? I wonder what made you decide that. Was it the PPI, the CPI? What was it that made you decide that? And what changed in the last 10 weeks? The words that want to come out of my mouth right now, you don't want to hear, folks. You don't want to hear. You don't want to hear. I've said a lot of things in September. I'm saying the same thing right now. This is ridiculous. This is embarrassing. Folks, we're going to start lowering rates. We're going to apply a new approach. What new approach? Yeah, your new approach is trying to find where the bike is so you could take it from the kid and give it to the pawn shop. That's your approach. You know what I have to say to the Fed? Here's what I have to say to the Fed. No soup. No soup for you. No soup for you. All right? No soup for you, Fed. No soup for you. All right, let's continue. So let's look at the numbers. Let's look at the bond market. Oy vey. Oy Gewalt. Oy wees mir. I just told you guys the only three words I know in the Yiddish language, and none of them are good. Oy vey. Look at this. This is bad. That's bad. Let's look at the number. Sorry, I don't mean to be so emotional today, but this is bad stuff. Did the numbers come out yet? They must have come out. I just don't have them here yet. Does anybody know? Numbers out, down, down. Yeah, down, 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 down. Mm-hmm. 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 Yeah, well, TLT definitely just said it all right here. Ay vey. Look at the daily on this thing. More downside, broke another low, another law, another low. So let's take a look. Let me just take a quick look here. I'm pretty sure by now it's out. Why is this thing so delayed? So let's see. Maybe folks here can tell me. Yep, USD hit a high. Yep, 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 yep. 256. No, they weren't expecting 256. They were expecting a lot less than that. But I'm curious what it is. It'll pop up. See, I'm a nice guy. I have this news feed called Trade Exchange, but Matt uses it all the time, and only one person can log in, and I don't have the heart to take it from him. But the bottom line is right here. I mean, I don't care what this says. This is the bottom line right here. And the bottom line is not very good. Look at this, guys. We just broke the new low. We're at a low on TLT. More people took money out of TLT. Is this good for stocks? Hell no. Look, look at QQQ. Look at RSP. Oh, RSP is actually starting to come up a little bit. And then look at SPY. Look at MAGs. Oy vey, look at MAGs. Bad, 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 bad. That's bad. Bad, 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 bad. All right. We'll get to all of this later. We got plenty of time. I don't want to rush. I'm sure. Okay, here we go. 256? Holy moly. Non-farm payroll. Look, they were expecting unemployment 4.1. Jeez Louise. Oh, look at hourly earnings. 3.9 lower. This is bad. This is not good. This is not good. This is not good. These are not good numbers for the Fed to deal with. Oh, very, very not good. Not good, not good, not good. Not good, not good, not good. Unemployment rate 4.1. They shouldn't be lowering rates right now, folks. They should not be lowering rates right now. But nobody listens to anything that I say anyway, so what's the difference, right? Okay, let's continue so Philadelphia Patrick Harker stated on Thursday policymakers are on track to reduce interest rates this year, but the precise timing will be fully dependent upon the incoming data. What are you, a clown? Boston Susan Collins said a more gradual approach to adjusting rates is warranted. Yes, yes, the last 10 weeks really we saw a major change in the economy in the last 10 weeks, haven't we? Considerable uncertainty. I didn't hear you say that 10 weeks ago. Bowman said she sees lingering. Lingering. Be cautious. Now, how come I didn't hear Powell say any of this 10 weeks ago when he lowered rates half a basis point and then doubled down 2 weeks ago another quarter? Don't get me started, folks. Don't get me started. Don't get me started. All eyes today are on the U.S. monthly payroll. Unemployment rate will be reported today. No trading till 10 a.m. today. We have consumer sentiment. Although after this report, I don't think it's going to have a major impact. This is bad, folks. Europe is flat, not really doing anything. Telecom stocks outperformed. Food and utility stocks lost ground. Nothing really happened in Europe. China closed lower. Right here, they're breaking down right now. As we speak, their top stocks are breaking down right now. They're not looking so well. Their consumer related and real estate stocks led the decline on Friday. Folks, again, I say it the way it is. I'm not going to sugarcoat any. One thing about me, you will never, ever, ever hear me sugarcoating anything. That's why I'm not an ad man. Cam, what do you think about all of this? Consumer sent exactly, Julian. I agree with you. We're probably going to break this year's low on SPY, which is, unfortunately, I agree with Penny. Japan closed lower today as cautious sentiment prevailed ahead of the U.S. jobs data. Auto and pharmacy stocks led the decline on Friday. The benchmark is a consecutive weekly decline. And I already told you that today, on top of before this report came out, Nvidia and AMD were down, and you know if these two are down, you're not going to see a lot of love from SMH, right? So let's just kind of take a look at it. Yeah. So we're trying to recover, but that's a big FU, excuse me, that's a big FU to the market this morning. That's a big FU to the market this morning, okay? And yes, I'm using bad language. All right, let me just post my links again. 1 o'clock class, brand new class, not a replay of what we did yesterday. VIP room, which I'll be talking about earnings. I want to give you guys an earnings scorecard. I have not done that yet. By the way, I'm working from home today. Matt, I think, is going to a wedding, so I'm not in a rush today at all. So you guys can have a little more of me. And here's customer service live. Cam, you've got a couple of more indicators that I'm going to have to teach you because we're going to have a lot of new stuff coming out this year. 2 new indicators or 1, 2 new indicator, a lot of cool stuff happening this year. All right, let's now talk about the stock market. This number's probably right now when we open, this number's probably going to be at 49%. When this number goes to 49%, institutions are going to slow down their program buying and program selling. Cam says, why do I have a hunch stocks will rally after the news is absorbed? Well, we've got earnings, Cam. We've got earnings next week. That could be a major catalyst. But right now, the way we're seeing things, we're going lower on the bond market. The point is, each and every one of you should be thanking me for saving you money by not putting out trades last couple of weeks. All right, this number is very dangerous. We're in danger zone right now. Folks, I know that you're going to hear it from all over the news, but I'd rather tell you this first. If this number goes to 49, we are officially in a bear market. But Roger, I thought the S&P has to... No. The S&P doesn't have to do anything. And by the way, the S&P is now reaching for the 100-day moving average, which will be a double bottom right here. I don't think we're going to break the 100-day. I think we're going to consolidate again here, which is good for what Cam is talking about, but it's not good right now. And remember, I don't want to put on trades that will do good next week. Then I'll put them in next week. I don't want to give you trades now that are. I just don't want to. I don't want to give you trades that don't have an edge. Eagle Beagle says Powell cutting rates before election, coming back to haunt him. Oh, whew, big time, Eagle Beagle. Big time. You too, Gustavo. I'm looking forward to learning how to play with my TC2000 with my Thinkorswim. Because if Matt's not around, I'm going to have to reach out to you guys. I am so bad at Thinkorswim. I am like awful at it, okay? But I have Matt, so this is bad. This is bad, okay? Let's look at RSP. Let's look at some charts. Let's look at some charts now. So the RSP is between the 100 and the 200-day moving average. Now, this is the equal weighted SPY. Notice we're just kind of sitting and consolidating here. And by the way, I'm not seeing all that much down. By the way, bond market's continuing going down. But let me show you something. RSP looks like it's bottomed out. Now, you may not remember, but I told you guys something really interesting. I'm glad my hesitation to put on trades has once again saved my butt. It has, Rebecca. Rebecca, there's a reason why Matt and I... Look, think about this, okay? We sit in front of all of these computers, and we're getting signals all day long. And all day long, we're saying, nah, it's not good enough. No, it's not good enough. It's not good enough. Would you rather us do that, or would you rather just give you guys blind trades that will just, yes, we're giving 2 trades a week, and they're all losing money? Who wants that? Come on, we're all grown-ups here. We all want to make money, right? The point is to give you trades that'll help you make money, not to give you trades that'll just, yes, I give the most amount of trades at the pub, and they all lose money. Come on, that's not what you want. So here's what I think is going to happen. By the way, this is not the first time I've told you this. I think ultimately the RSP and the SPY are going to calibrate. They're going to come to the same level or near the same level. Matter of fact, the MAGs, if you look at the MAGs right now, you will see that they're not going down all that much, but they're still consolidating. If MAGs continue to consolidate, right, then what will happen is they won't give the SPY that power that they were giving over here. And if that happens, the SPY, remember what I told you? One is going to go a little lower and one is going to hold off and they're going to come together. Well, the SPY is approaching the 100-day moving average. RSP, this is really important. These little details right now are really important. Notice it doesn't have an uptrend, but notice it looks a lot more like gold. It's kind of trying to stick, it's trying to create an uptrend here. And this asset is still going down like this. You see that? I know you're probably going, Roger, you're reaching, but I'm not. You see how this is going lower? The trend is getting lower here, and how the trend here is kind of evening out. So what I think will happen is, and no, you're not going to learn this from anyone else. Nobody's going to get this detailed with you. And that's, I think, as the mags continue consolidating, which is exactly what they're doing, which means we haven't been able to make any money on it, and nobody can because they're going up for 3 days, down for 3. This is chop, 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 chop. If mags continue doing this, you're going to see a much more evening between the RSP and the SPY over the next couple of weeks or a month. It may be, and I hate to say this, but it may be that we need more downside pressure in the SPY via mags in order to achieve that. But I think what eventually is going to happen is we're going to have an equilibrium between the mags and the SPY. Notice the mags are not rising anymore. Notice the rally in the mags waned away right around the time we stopped aggressively trading, this period right here. The Tesla, the Netflix, the Nvidias, you can't make money in a market like this in those stocks unless you're day trading. You can't. There's no momentum. Up, down, up, down. Here's where the money is. Here's where the money. You need a linear move. Remember, I always tell you guys don't trade choppy stocks. Well, guess what the SPY is doing right now? And guess what gives the stock market its control? And by the way, this is the election VWAP. This is the Magnificent Seven. As of this morning, the mega caps are below the election buy levels when you consider volume. Sorry, guys, I'm going a little longer today than usual, but it's for the best. Look, we're below this level. That's very, very bad. RSP. We're below the election VWAP by a huge percentage. QQ, what about QQQ? Below all the levels and now breaking the 50-day moving average on the SPY, on the QQQ. Sure, yeah, let's take some trades while the QQQ is at the 50-day moving average and doesn't know if it wants to go up or down. Sure, that's a great idea. That's a good way to lose money. Let's do that. While the SPY's doing this, while Nasdaq is doing this, let's put on some trades and lose money. Yeah, that's a great idea. Don't do it. Don't do it. Don't do it. Hey guys, how about a thumbs up? Everybody except Carla, please. Carla doesn't believe in giving me a thumbs up. All right. What about equal weighted QQQ? Probably doing the same thing. Yeah. I mean, look at this. Do you guys think that there's money to be made in this type of market environment? Gap down. This is shit. This is 50-day moving average, 200-day moving average, 100-day moving average. Yes, we're just going back and forth amongst these averages. There's no money to be made. There's no money to be made. All right? No money to be made. Now, SMH. Let's look at SMH. SMH is down 1%. What happened when we went up to 263.58? 263.58, almost 265. Pow! Right in the kisser. Pow! Right in the kisser. What happened here? Pow! Right in the kisser. Do you understand why we need to wait till we're above this area right here? And you probably don't remember because it was so long ago, but I did tell you at a galaxy far away, right around here, don't touch SMH till we're above this gap level. I'll draw to my... I know you probably don't even remember. It was so long ago. If you bought SMH before this level, no soup for you. And again, Darren, thank you for the nice T-shirt. I really appreciate it. Darren got it for me over the holidays. Thank you so much. I appreciate it. 0.97 down, back down here, folks. This is not a time to be frisky. Let's look at IWM. This is not a time to be frisky. The good thing about it, HG, is everything I say I repeat like 100 times. Look at the Russell 2000. Oh, this is fantastic. We're breaking compression to the downside right now. We were compressing here. We're about to hit the 200-day moving average. Look at this. Nice compression. This is today. This is right now. This is no good. Now, if we start breaking the 200-day moving average, if RSP starts breaking the 200-day moving average, which is right here, we're going to aggressively start trading to the short side. Right now, we can't aggressively trade to the short side because 500 stocks are doing this. How can you make money in the market? How do you make money in the market when, here, let me see if I can draw this. How come they don't have a box, like a box? They should have a box. Huh. They like usually there's rectangular boxes here. Hold on. Maybe this will do. Ah, right here. There we go. There we go. You see this? This is a very, very bad place to be. Very, very bad place to be. You know, believe will be profitable to open the one that believe voting on patience. Glad I was patient. Yes, folks, trust me. Cash is a position, a major position too. Yeah, it's a cash is a position, folks. I'm telling you, look at this. This is the SPY. This is the equal weighted SPY. How do you make money here? Income, yes, absolutely. But anything else? No. All right, let's check on the bond market and then we'll get into the details, get into the nitty gritty. So equal weighted SPY starting to come back. SMH is trying to come back. Bond market is not coming back. QQQ. This is bad. This is bad. Remember, TLT, 73% correlation with the market right now. And no, I'm not making this up. Please, please keep your powder dry. Come in low right now. Trade one share, trade one contract. Don't do anything crazy. Nobody made money the second half of December. Nobody makes making money right now. Nobody. You can't make money in this type of an environment unless you're selling premium. Okay? I'm sorry if I keep saying the same thing over and over again, but the last thing I want you to do is look for hot trades today. Okay? On a Friday after this report, it's not a good time. All right, what about momentum levels? I already shared this with you. I already shared this with you and told you that this is very, very, not this. I already shared this with you. And I explained that this number, if this goes to 49 tonight, we're not in a good position. We're officially in a bear market. No, it doesn't, Stacy. It's a regular market today. It's a regular market today. Market performance. Look at the SPY, 53% above the 200-day moving average. More importantly, and folks, my suggestion to you right now is to look at these stocks right here, the Russell 1000, 2000, and 3000. Roger, why should I be focused on these right now? Because these are the 100 biggest stocks. These are the 200 medium cap stocks, and this is them together. And these are basically all the liquid stocks that people trade without the penny stocks, without all the nastiness in the market, the 3,000 stocks that people trade. We're at 51%. And look at the Russell 2000, 48%. That's a bear market, folks. We are in a bear market on small cap stocks. We are in a bear market on, Angie, FXI, what close to the below the 100, coming to the 200. And don't think they're not pressuring us. They are. They are. I know a lot of people get happy when they see bad things happen to China because they think China is competing against U.S. You shouldn't be thinking that way. You shouldn't be thinking that way. 75% of things that are sold on Amazon are made in China or Chinese companies, and parts about 85%. Retail investors will think prices are on sale on favorite stocks. Don't do it. No, don't do it. We're not on sale right now. This is not a sale. This is not a discount. This is not a discount. Thank you, Kevin. I appreciate it. Very kind of you. Thank you. Thank you so much. I appreciate it. Very nice of you. Um, yeah, by the way, look at the bond market. It consolidated and just broke down. We're going lower on the bonds. That's bad. So Cam, what you were talking about, reversal, not seeing it today at all. Look at this. This is very powerful. When you have a move like this and you consolidate and you break down, that's pretty powerful and not in a good way. All right. Okay. Sectors. First of all, momentum levels. Let's see if there's any momentum to the upside versus downside. There's 33 stocks making 90-day highs. There's 11 stocks, folks, making 20-week highs right now. Sure, great opportunities right now. 11 stocks making 6-month highs right now. 11 stocks. Not 50, not 100, 11 stocks. 11 stocks making 20-week highs. How about 24-week highs? Let's take a look. I have one for 20. I have to make a 52-week too. I haven't done that yet. But let's look at the 24-week highs. 1 second. 50-day highs. 12 stocks. That's beautiful. Great momentum to the upside right now. Perfect time to trade to the upside. Perfect time to trade to the upside. Yes, I'm being very sarcastic. 24-week highs right here. 29 stocks making 20. Folks, we're in danger zone. But I will say this, the 20 stocks that are breaking out are seeing institutional sponsorship because it's hard to be part of this 30 group if you're not seeing institutions buying right now. So there is some silver lining. So we have no momentum to the upside. But we actually have fairly good momentum to the downside. And again, I had absolutely no problems finding bearish stocks today. Okay. But again, the problem is not the bulls and the bears. The problem is this. Let me show you what the problem is. The problem is this. Market first. What is the market doing? Nothing. So what would happen to my shorts right now if the market keeps doing this? Nothing. That's why I want to wait for us to break the 200-day moving average. Because if we break the 200-day moving average, then we have a clear downtrend. Do you guys understand I want you guys to understand exactly why I'm doing, what I'm doing, and the logic and the reason behind it. Am I explaining this to you in a good way? I want to make sure you guys understand why I'm being cautious, why I'm not being optimistic, why I'm being fearful, why I'm telling you to keep your powder dry. Do you guys understand all that? And I'm not doing this for my health, and I don't have to be here right now. I'm not on the clock for another half an hour. I'm doing this out of the goodness of my heart, and I want to understand why. I want you guys to understand. Okay, good. If I can get 5 of you to avoid trading today or wait till we get a good high probability setup, then I've done my job. All right. Okay, good. Now, let's look at sectors. And then I'll give you stocks. And again, I don't have to rush today because I don't have to be anywhere. I hate rushing. I like to take my time. All right. So I wouldn't put too much value into this. I mean, look at this right now. Semiconductors are in the first place. I mean, you've seen semiconductors right now. This is semiconductors. Look at this. This is the daily on semiconductors. They're in first place right now. How do you trade this right now? Tell me. How do you trade this right now? How do you trade this? This is a mess. This you could trade. This you could trade. Even this you could trade. But how do you trade this? This is caca-poo-poo. So while they're number one, I'm not putting a lot of faith into them. Thank you, Eagle Beagle. Good, William. Yes, don't look for adventure today. This is not a time to look for adventure. And then you have a bunch of blue chips, but then you have QQQ, but then you have mid cap, but then you have Bitcoin. So to say that this is fragmented would be a gross understatement. There is absolutely no directional bias here at all. I wouldn't be able to make heads or tails out of this. Let me show you. Semiconductors are up here. Okay, QQQ's up here. Okay, you got 3 blue chips, 3 of the most defensive sectors in between them. Okay, fair enough. Then you got mid caps next to QQQ doesn't work. Then you have Bitcoin next to S&P 500, and then technology. Technology's here, but semiconductors are up here. Hello? No, that doesn't make any sense. Then you have communication next to technology, which is good, but then you have consumer discretionary all the way down here. You see the Dow Jones is here. Russell 2000 is, oh yeah, the Russell belongs right next to the financials in Dow Jones. Right, right. No, it doesn't. So we're seeing it's a shake and bake. It's like somebody bought a bag of food and shook it, like you went to McDonald's takeout or Starbucks, and then you shook it for 3 hours. And then you gave it to me. And you're like, here you go. Where's my Big Mac? Where's the sandwich? It's all over the place. Rich says at least the number of stocks making new highs gives you less tickers to analyze. Exactly, exactly. Bob is the champion of the thumbs up. Thank you, Bob. I appreciate it. Yes, cockapoo. That's my new technical. When I say something is just awful, god awful, I say cockapoo. All right, let me give you some links and then we'll continue to the stocks. This is the link for the 1 o'clock session. And folks, if you have other gurus that you take trades from and they tell you that the market is in a good position to trade right now, and it's a high probability environment right now, and that this is a good time to trade, throw the book at them and tell them they need to lose their trading license. Okay, all right. There's customer service. There's the trading pub, customer service live, Cam and Gustavo, and sometimes Chip Show, and my VIP room, and the 1 o'clock session that I'm going to have. And I highly, highly recommend you show up. It'll be brand new. Yeah, well, again, me telling you something doesn't mean anything. Me showing you this and showing you, I mean, look at this. How do you make money? This is 400. This is the equalized SPY. How do you make money here? Teach me. I want to learn how to make money here. Income, absolutely. But directional? No. Corey says, reminder, tax estimates due today. It's a snow day here in north central Alabama. Kid home. Think I will just go sledding and build snowman. That's a great idea. I'm jealous. I'd love to do that. All right. So now let me give you stocks that I'm liking. I'll give you stocks to the downside and I'll give you stocks to the upside. I'm giving you the best stocks I can, and I'm telling you, please be careful. Let's check the bond market one more time real quick, okay? Starting to not really rallying, just basing here. When it bases, like after a move like this, if you can't get a little bit of a run up, not even to the VWAP, it's very bad. Let's look at QQQ. Nope, can't recover three. It has to recover 3/4. Remember, 3/4 of this move has to be recovered. RSP. Oh boy, look at this. At the bottom. MAGs. We got to recover 3/4 of this move. Anyway, not seeing any love right now. All right, let me give you stocks that I like. MGM to the downside. Today's my parents' 55th anniversary, guys. Can you imagine that? 55 years. 55-year anniversary. I like MGM to the downside. I don't like the market though, but I like MGM. Caesars, obviously same boat as MGM. You don't need to take both. And again, look at how compressed this is. There's not a lot here. But these are stocks that I'm looking at. AMD, nice trend down. Remember AI. Yeah, where's AI now, AMD? Thank you, Phil. I appreciate it. 55 years, yeah. January 10th, their 10-year anniversary. ExxonMobil, be careful with Exxon, with energy moving up. But the fact that the stock is moving down, I would wait for this to break down a little more, but I like this to the downside. Below 105, below 106. I like it below 106. STLD, Steel Dynamics, industrial stocks are not doing well. This is an A line. It needs to break 114. It needs to break 114 to the downside. Albemarle, chemicals, beautiful stock, but it's got support right here, so you want to wait for it to break down. But I do like this stock. COO, Coupa. below this line right here, below 91.50. KSS, the first time we've ever talked about this stock here. Thank you, Penny. I appreciate it. That's a very nice thing to say. Paul, we've been doing that. We've been selling credit spreads. Yeah, we're inviting them over for dinner tonight. We're going to have a nice little get together. Have some steaks tonight. Now, if you want a beautiful stock to the short side, this is about as beautiful is going to get. This is a beautiful stock to the downside. I may want to short this stock today. Also, pizza doesn't look bad. Pizza looks really good to the downside. Dow Chemicals. These are beautiful stocks I'm giving you. These are beautiful stocks I'm giving you guys. Okay. PLL. A little choppy, too many wicks, but starting to look good below. It's a cheap stock. Forget it. It's too cheap. I mean, you could do it. You could do it if it drops below 850. Below 850, I would like this stock. All right. Now let's talk about the long side. Again, folks, remember, I know there's a lot of stocks right now. Please, 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 please be careful. Be really careful. The market is not cooperating. VRSN. First time we're ever talking about these stocks. First time ever. Never talked about these stocks before. I mean, like, look at this. If you buy this right now, you'll probably make money, but you may be stuck in it for 3 months. So need to break out. We need to see it break out. It's in a compression. Hopefully it'll break out to the upside. Don't do anything right now. Please. Uh, Ellen, what symbol did you want me to look at? I'm sorry, I can't. Die Mohel. Sorry, just repeat it again, and I'll post it for you. Um, EW also a lot. It's got some. I don't like these wicks, but this stock could definitely move higher. Although be careful, it's got the 200-day above it, but it's got a nice trend up. Again, it's hard to pick good stocks right now. Now this is a good one right here. This is a really good one. I like it a lot. I like the stock a lot. Roblox, TPR. I like the stock a lot. It's the first time we're talking about this stocks. First time ever. I like UAL, but we got to be very careful with the UAL because Delta's coming out with earnings today. And yes, airline stocks are extremely they're extremely related. So I like the stock, but I wouldn't be buying this stock right now. But again, my job is to show you everything I'm looking at, and that's what I'm doing. That looks really good right now. AS looks really good right now. GMed looks really good right now. I bet you if we put a VWAP right here, it would probably cross over right there. So this one's probably ready to go. Ralph Lauren. Looks good. Looks good. Looks good. Somebody said Builder. I like Builder to the downside. As of last week, I like Builder to the downside quite a bit. Yeah, I like this stock a lot to the downside. A lot. Great stock to the downside. It's it's compressing, but it's compressing with a little bit of a downslope. Anyone who jumped in on Quick Strike would know when deck is coming out of compression. Yep, right. XLE, real quick. I'll look at that. That's all my stocks for the long side. Now, XLE energy sector, you have huge resistance here. You got three moving averages and a VWAP here. So you have a huge resistance area here. Okay. AR, I liked AR and I still like AR, but here's the problem with AR. It's a little overextended. Okay. Geo, let's look at Geo. Geo? I don't think that's a ticker symbol. Oh, yeah, it is. Geo is looking very nice. Very nice. Very nice. A little choppy, but it's starting to come out. It needs volume. And again, you got to be careful right now with this market. You got to be really careful with this market. Very, very careful with this market. RJ, eBay is a little too gappy right now. Okay? All right. I had a fantastic time. Once again, let me give you my information. At 1 o'clock, I'm doing a very special class. I don't think I've done this broadcast in almost a year. And here's my VIP room link. We got earnings revisions today that we need to talk about. Um, Here's Customer Service Live, the Cam and Gustavo show, right here. And I will see you all later. Here's my email address. No customer service questions, no refunds, no exchanges. I don't deal with any of that stuff, and I'm not going to start now. But if you have a good trading question, I can answer it for you. Yeah, I could check Square. Square was one of my favorite stocks earlier this year. Let's see what it looks like now. No. Lower highs, breaking the 50-day moving average, taking out the slow. I just gave you 3 reasons to short this stock. Lower lows, breaking the 50-day moving average, and breaking the support level. That's a stock you would short right now. Maybe if it breaks above this level, we would look at buying it 95.50, which I probably will, but not right now. This is a short right now. This is a short. Let me look at PayPal too. Short to choppy. Yeah, look at that. Just nothing. Nothing. Folks, I'm telling you right now, do yourself a favor. Go watch a movie or something. No, has to break below this compression. I'm telling you, the market's not seeing any love right now. Asking for you just to get the pleasure to buy again. There you go, Carlos. Bye, guys. I'll see you later. Have a great day. Love you all. I'll be around here all day at this chair, and I'll see you in the VIP room. Bye, guys. Yeah, FNMA, that's more of an investment stock, Claire. All right, guys. Bye. Love you all. Have a great day.